A sell-side institution provides advice and services to clients who are normally either buy-side investors and/or corporations. When you think of the sell side, there are two main areas: institutional client services, which are typically referred to as brokers or sell-side research, and investment bankers. Sell-side research provides research on companies to the buy side, either asset managers or asset owners, and they provide their opinion and research reports on the quality and value of the stocks that they cover. The sell side will typically have a rating and recommendation on the stock, such as a buy or sell or hold, and a specific price target. The research is typically used by the buy side in conjunction with their own research to determine if a stock would be a good investment. Sell-side research analysts will call a company to speak with the management team and get a sense of the company's prospects, their overall potential for growth, and how they stack up against other competitors in the industry. Keep in mind that the sell side does not get direct forecast from the company. The company provides the street with a general range of forecasts to help the street think about where the upcoming quarter or the upcoming fiscal year may be, but the sell side does not get confidential information from a company. The sell side is essentially making their own forecast based on what they hear from the company and publishing those numbers and opinions to the buy side. The sell side also provides additional services like holding conferences or making introductions to a company management teams for those on the buy side who are interested in meeting the company and want a direct connection with the management team. For all this, the sell side either charges a fee or will make money when the buy side clients trade a stock. The sell side will hope to get these trades and will charge a commission for that trading. On the Bloomberg terminal, our sell-side research is located in a function called BIGO, Bloomberg Intelligence. Here, the one difference between the sell side at a bank and Bloomberg is Bloomberg does not give a rating or target price forecast or estimate. Bloomberg focuses more on the company's strengths and weaknesses and highlights formatted data sets that can be used by the buy side. The other aspect of the sell-side institution is the bankers. There are two main types of bankers, including investment bankers and commercial bankers. So let's take a look at each group. Investment bankers work directly with companies and provide them with advice to help with their strategic needs. This could be in the form of taking a company public, raising new debt, or refinancing existing debt, providing M&A advice to either buy or sell a company. Commercial bankers focus on lending money to these companies. The commercial bankers take deposits they get from savers, you and me, and a portion of that money goes to make loans to companies. They review the creditworthiness of the company and decide based on the company's prospects if they're willing to lend them money and at what rate. Many times, investment bankers and corporate bankers will work together to provide an integrated service to the companies, where the investment banker will provide advice, the commercial banker will provide the financing or the debt financing required by the company. There's a key difference in the information that corporate investment bankers receive between what the sell-side research providers get. Commercial and investment bankers will actually receive a company's internal forecast projections. So this is the projections that the company itself thinks it's going to hit. This is highly confidential information, and as I mentioned, is different than what is provided to the sell-side research, where they're just really giving their opinion on where they think the forecast will be based on speaking with that management team. This is a practice that is strictly regulated, and no buy-side investor should have confidential or what we call insider information on a company. There have been many high-profile cases involving insider trading in the news, so it's something that bankers and firms really try and avoid. From a compliance standpoint at sell-side firms, they will make sure that these two groups, the bankers and sell-side research, do not interact. This is what you would normally hear called a Chinese wall. A bank will separate these two groups within a firm and make sure that no information is exchanged between them. The internal working team for both investment and commercial banks, and so what I'm talking about here is how the teams are structured to work on any given transaction. The working teams will comprise of both senior and junior bankers. Junior bankers are called analysts or associates. An analyst is someone directly from undergraduate school and has somewhere between 1 and 4 years work experience. An associate will generally have completed graduate school and they have worked in the industry prior to going back to do their MBA or go to graduate school. Both the analysts and the associates do a lot of the heavy lifting on a project, including company research, modeling, and data analysis. More senior bankers include a vice president, so they'll generally have between 6 and 9 years of experience, and many times will interact with the company to get financial information, talk about the process steps, and are many times presenting at client or board meetings. The final two highest levels of the team include a director and a managing director. They can often be called different things, but they're typically the most senior people on the team. The two positions will be similar, except that a managing director is responsible for the overall project and its success. Managing directors will have much more experience, typically more than 15 years. On very high-profile deals like large M&A transactions or large IPOs, managing directors will be in direct contact with the board of directors and senior management team and walk them through all steps of the process and provide strategic advice throughout the transaction. These are typical guidelines for each firm, but each firm may have different rules depending on the bank and the group specifically. The structure for a commercial banking team will generally follow the same profile as the investment bankers when putting together a working team. Although in practice, I found that commercial banking teams tend to have fewer people, so the teams will typically be between 3 and 4 people rather than 4 to 5 as you would normally see on the investment banking side. There are many different types of banks. Some are smaller and provide focused services such as M&A advisory or restructuring advisory services. These banks are typically boutique and focus on one aspect. Then there are larger financial and diversified banks. These would be firms that provide a full range of services but typically will only focus in one country or a couple of areas. So perhaps the banks only provide services in the United States. Finally, there are large, full-service global investment banks. These are banks that provide almost any service a company will need on a global basis. So if you need investment advice on buying a company in Japan, they will have a local team in Japan. Or if you need to do an IPO in Canada, they would have teams and the licenses required to get that done. The sell side uses a number of alternative data sources and providers where they obtain information, including financial numbers, company-specific and industry-specific data sets, deals and transaction publications, and specific data and news from various information services. Bloomberg has a number of advantages for sell-side clients in that we provide an integrated workflow with a single location with a large breadth of industry data across multiple sectors and asset classes. Additionally, users have the ability to customize the data very easily in a Bloomberg, and Bloomberg has a very strong mobile connection to the terminal, so bankers and sell-side research analysts can use the product on the go when they're outside the office. Finally, Bloomberg has second-to-none brand recognition, and its users can trust that the information on Bloomberg terminal is correct and accurate.
Sell-side institutions can use FAGO to get comprehensive financial data for a company or equity index. For example, imagine you are a sell-side research analyst analyzing companies to make recommendations. If you wanted to identify segments that have shown the greatest % increase in net revenue over a specified period, where can you find this on FAGO? Hover over the tabs at the top of the screen to read brief details of information available. Click on the tab you would select. Not quite. To analyze segments, you would need to click on the Segment tab. Which segment has shown the greatest percent? Not quite. Incorrect. Corporate and investment banking